720 KHTS and FM 98.1. This is your special financial show at the American Family Funding. Dave Cantrell, Fred Arnold. Good afternoon, Dave.
Hey, Fred. How you doing? I am certainly glad to be inside right now.
Not outside. It's hazy, I want to say smoggy, but it's fiery.
Fiery,
yeah. Smoky and hot as an oven.
Yes.
Anyhow, wanted to initially talk in this initial segment about the unemployment numbers, Dave. They came out at 1.1 million unemployed individuals. And when you go back and look at the averages over the last 5 weeks, last week was 971 million, so it popped up more than that, but it had been trending down because it was 1.1 million the week before.
Right.
And then 1.4 million.
Right.
And it was there for a while. So trending down, but we're not out of the woods yet.
Not quite, not quite. I think that bump might have had a little something to do with some people that extra stimulus had run out, and so maybe that was some of the reasons. And I think some of the programs, the PPEs or PPPs and those kind of things are starting to run out a little bit too. So that might be what's causing a little bit of a bump this week.
Yeah, I mean, let's look at continuing claims, and continuing claims are how many claims are continuous, right?
Right.
As it says, it got better by 636,000 to 14.8 million people receiving unemployment. That's a high number.
That's a big number.
Yeah.
It's still a big number. Yeah.
And when you consider two other things I want to talk to you about so you can get the truth, because I think it's about the truth and looking deeper into the numbers. There's something called the Pandemic Unemployment Assistance Claims. Something new.
Right.
And the government was trying to help self-employed borrowers who were hit but typically didn't pay into unemployment.
Right.
And so they weren't able to take advantage of unemployment, but in most cases, have their income diminished quite a bit. That was at 543,000, 500,000 people.
Right.
So if you add the unemployment claims of 1.1 plus 5, let's say 500,000, you're looking at 1.65 million people claiming unemployment.
Yeah, new claims this week.
Yeah, and then their continuing numbers are 11.2 million. So if you look at how many people are unemployed, it's at 28 million.
28 million
people. That's a lot of people that need jobs.
Yep, it is. It's sad. It's unfortunate that this is continuing, but that is the numbers. That we have 28 million Americans out of work.
Yeah, and so we need to continue to get this economy going slowly and in a safe way, of course.
Yes.
Which is so important. There's one other number that came out, Dave, that I want to share, and that is the Cass Freight Index. You know what the Cass Freight Index is?
I think it has to do with trucking and shipments across the country, right?
Yeah, shipments of materials, including rail.
Okay. And
it had actually gotten better. It had dropped 17.8 year over year last month.
Right.
That means 17.8 percent of the product that was shipped last year wasn't being shipped this year, right?
Right.
And then this year, or this month, it went to 13.1 less, but it was an improvement of what's that, 4?
Right.
4%. I think people are ordering stuff online, right? And going back to a few stores. What do you speculate?
Because what this shows, what this is, when you buy something, pretty much any 99% of the time, it has to be shipped, right? And so that's why they track these numbers. And basically, what this is showing that because last month or last year was a 17%, this year it's a little lower, but it's still up month over month. It shows that people are still buying things, people are still having things shipped to them, and so that's a good news. It is good that people are still putting money into the economy.
Yeah, and the last bright side is called the yield curve control.
Right.
And it looks like the Federal Reserve is dumping $100 billion a month into the economy. Now, during the Great Recession in 2008, they were dumping 20. Was it 20? No,
it's 40
no, 60.
60. Yeah.
So they were dumping $60 billion when we had the crash of 2008, if you will.
And everybody couldn't believe how big that number was.
Now it's $100 billion.
And now it's $100 billion.
Well, what they're doing is they're pumping money into the economy, keeping money stimulating. Now, if you do too much of that, you get inflation.
Right.
And prices rise too quickly, but if you do it and it's controlled. So the Federal Reserve is trying to keep interest rates lower, which is helping, low interest rates, who's that helping?
Well, it pretty much helps anybody. You're obviously, the first comes to mind is mortgage rates. We're mortgage lenders, and so that's the first thing that we think about. But it also means that credit card rates come down. Any money that you borrow will come down. Your home equity line will go down. All of these things will go down. And so keeping interest rates low allows for more money to be put back into into the system, because if you're paying less interest, that means you have more money that you can then go out and buy things. And obviously by the shipping number, it shows that's what people are doing.
Yeah, absolutely. So if you get a chance, go out there, refinance your car. If your car
Yeah.
rate's high,
Yep.
refinance your house. Give us a call at American Family Funding. Happy to help you also, or at least give you some advice on what to do there.
Yes.
And high interest rate credit cards. Get those paid off.
Yeah, immediately, as soon as you can.
We're going to jump to a quick break, but when we come back, we got Taylor Kelstrom.
Yep, awesome.
Yep, he's a good guy for Remax, and he's going to talk about the hot real estate market. We'll be right back.